and joins us now. Nice to see you. What do you make of the current confusion?
Well, first of all, nice to see you too, John. Well, it's an interesting scenario. Obviously, if we look at it from a fundamental basis, there is so much changes that are happening constantly. So we have to kind of look at it more from a technical standpoint. And what we had was support that lasted for a very, very long time throughout the indices and through some of the sectors, now resistance. So we're definitely in a market that seems more towards selling rallies. As far as what's going on with the tariffs, it's a huge gamble. If he rolls back, maybe it's more in the automotive space, because he did kind of talk about that last night in his speech, that he wanted to be really gung-ho for the three major automakers in the U.S., and obviously tariffs affect that. But we're really looking at this right now as more of a stagflationary environment that's been setting up for a while now, long before Trump came on the scene. And now with some of the things that he's talking about, the pain of higher prices, with some contraction in the economy, it looks even more inevitable.
There was, that seemed rare for the president to talk about, some challenges in the short term, based on what you're saying, is the idea of kind of a rolling tariff scenario something that the market might start to think about, especially if you've got some compromise today? Because, maybe it's just autos, and maybe you see all this concern about, the dairy industry, or, even yesterday the president was complaining about the Canadian banks not allowing other banks into the Canadian market.
Well, he's definitely been really pushing down the hammer on reshoring, bringing industry back to the U.S., obviously acquisition of minerals from other countries. And all of that, in the long term might be great. It's a gamble at this point, though, because we don't really know, even with rolling tariffs, we still have other concerns in this country. We still have a very large debt. We still have a lot of spending. We have the Treasury right now that owes $7 trillion in debt, which has to be refinanced this year with interest rates. Even though there's a call for them to be lowered, we haven't really seen that from the Fed yet. So if you put all of this together, it does seem like we're going to see a tumultuous, rocky road, not necessarily a major bearish move, but I'm really not looking at this point of a stability of the market where what we've been doing for the last few years, which is come in every dip. I think it's going to take a while to sort out, and it's possible we see gains at the end of the year, but I think there'll be modest gains.
And as I hear you say that, and I think about similar situations in the past, that doesn't necessarily seem unusual to have, in particular, two really strong years for the stock market, and then a third year that looks a lot wobblier. But I guess for people who are trying to decide what to do with their money right now, where do you think the wind blows? Where do you think the capital seems safest in 2025?
Well, I'm really focused, obviously, in terms of the U.S. markets, made in America. I think, we can look at the car industry. I know, obviously, we're seeing a pop here in General Motors and Ford today. And even though he talked about EVs and getting rid of the incentives, I still think that we have Rivian as a really good, strong potential mover, especially since Tesla has fallen out of favor more lately. I'm looking at the biotech space. I'm definitely looking at the metals, particularly silver. So there's areas, the vanity trade, which I've been talking about, which essentially is the domino effect of how consumers will spend money when they lose weight from the diet drugs. But you have to be careful. We went to a lot of cash over the last couple of weeks, and we're really looking to employ mostly in stocks that may be basing out, as opposed that had the great run and now a big sell-off in hopes that they're going to have another great run. I like the risk better on the basing out stocks.
All right. Really appreciate it, Mish. Thanks very much. Mish Schneider joining us, Chief Strategist at Market Gauge.